All right, gold prices have had a wild ride recently, with some analysts calling for a possible pullback of up to 10% in the near future. Now, before you panic and bury your Krugerrands in the backyard, let's unpack what's going on and why a price dip might actually be great news if you're someone who's been sitting on the sidelines wondering when to get started. According to Standard Chartered's precious metals analyst Suki Cooper, one of the big drivers behind gold's recent climb has been strong buying from Asian ETFs, especially out of China, something that wasn't really part of the earlier 2024 rally. On top of that, central banks have been gobbling up gold since 2022, and that trend has not slowed. What's unique now is how many new drivers are feeding the fire: recession worries, tariffs, trade war chatter, geopolitical flare-ups. It's like gold is the only adult in the room that doesn't flinch when someone slams the door. Cooper pointed out that it took gold 5 years to break past 2,000 on a sustained basis, but only a few weeks to sail past 3,000 and stay there. By the way, if you're watching this and wondering how real gold actually fits into a retirement strategy, you might want to click the link in the description. Goldco's Gold and Silver Kit explains exactly how precious metals IRAs work, how you can purchase gold and silver, and why some folks are shifting part of their savings into physical metals. You'll get a digital and physical copy of the kit, and even an audio and video version for when you're stuck in traffic or doing the dishes. Just don't mix them up with your recipe podcasts. Now back to the idea of a pullback. Cooper expects that if geopolitical tensions ease and U.S. stimulus ramps up, we could see gold dip around 10% from recent highs. But here's the thing, that's not necessarily bad news. That's the market doing what it does, breathing. Price consolidation after a big run is totally normal and can create a strategic moment to get in before the next leg higher. Remember, even with a potential cool-off, gold is still projected to stay above $3,000 according to Standard Chartered. And let's not forget the nature of ETF demand. While it's certainly part of the rally, ETF inflows can reverse quickly, and if they do, you don't want to be holding the empty wrapper when the candy's gone. That's why a lot of people are looking at holding actual physical gold, not paper claims or ticker symbols. Plus, the central bank buying spree isn't just a short-term trend. These aren't quick trades. They're strategic, long-term moves to diversify reserves and hedge against a changing economic landscape. Cooper confirmed that multiple banks from different regions are still accumulating gold, even as prices hover near record highs. And here's something else to chew on before you click off and go watch videos about how to get six-pack abs with no effort. Spoiler, you can't do that. While everyone's focused on where the price is right now, smart money often looks at where demand is coming from. If we continue seeing structural demand from central banks and new entrants like Asia's retail investors, this could be just the start of a longer trend. Oh, and one more thing. Before we wrap, if you're thinking about gold and you haven't looked into Goldco's current offer, well, you really should. Right now, you could qualify for up to a 10% instant match in bonus silver and a free Ronald Reagan half-ounce silver coin. Again, click the link in the description to see if you qualify. It's first come, first serve, and supplies are limited. Gold may take a breather soon, but if you've been thinking about physical gold, this might be the break that you've been waiting for. If nothing else, now's a smart time to start learning how to make gold part of your long-term financial strategy. Hey, subscribe if you found this helpful. We've got more coming your way very soon. And remember, gold doesn't rust, doesn't corrode, or doesn't go bankrupt. But it sure doesn't like to be ignored either.